Hey guys, this is an update on the uranium sector, specifically UUUU, or the 4Us, which is Energy Fuels Incorporated, URNM, which is the Sprott uranium mining ETF, and the global X ETF for uranium, which is URA. Now we thought we had a bottom in our last update. It looked like it had a chance to be it, but seems like we've had subsequent lower lows since. It's been the same story in a lot of different asset classes, although the stock market hasn't quite seen a lower low yet. Now, before I go on, a lot of these charts will be available in the description below, so check out the links down there if you're interested. But this is our 50-minute chart, UUUU, called the 4Us from here onwards. And well, we had a rally set up at one point, but that has long broken. We had a pivot zone that we were trying to attack, so that is off the chart, as is this box. And we've had a lot of downside since, which is not really the worst thing. We're going to look at the big picture charts just to get at why this is actually a good thing in terms of analysis. But we have a clear impulsive structure down. You have a 1, 2, 3, 4, and a 5. Your fourth wave looks relatively legit. There's no overlap between the fourth wave bounce and the bottom of our first wave. And it's long and slow and grindy, and it doesn't look impulsive. So it follows all the rules of what you'd expect a fourth wave to follow. And then we've had a lower low that actually did get into our target range between the 0.382 and the 0.61 extensions of our 3-4. So that looks good. And in addition, when we take a closer look at this final fifth wave, it too has a clearly impulsive look to it. You got a 1-2 here, third wave, sideways fourth wave, and a fifth wave to finish things off. As a matter of fact, this almost looks like an expanding triangle in here of some sort. Perhaps that's what it was. You don't see that very often. That is the 4Us. When we shift over to the other two securities, URNM, much the same posture here. A 1, 2, 3, long fourth wave and a fifth wave. Didn't quite go as low, bit truncated looking, but it's looking relatively complete. And finally, URA is in the same boat, in which here too we had a 1, 2, 3 long fourth wave, although this one bounced a little higher than the other ones did. And we finished our fifth wave down. I'm just trying to see what the extension is based on our 3 and our 4, and it basically hit the 0.61 extension exactly where it should. Now, not only did we hit our targets and have complete looking structures, we're seeing some MACD divergences as we'd expect. As we got lower in our fifth wave, you can see how there's a divergence in the MACD. It's going up here. It's not pulled down as much. And when we look at the bigger picture, there's also a divergence between the third wave bottom and the fourth wave bottom. I'm actually going to zoom out a little bit just to demonstrate that. You can kind of see that here. We went lower, but we didn't stretch down as low. That's far more apparent on our big picture chart. So this is, again, 4Us available in the description below. We were looking for a potential lower low. It would have been a C wave to complete what we're calling a second wave. And as you may recall from our last update, this didn't look complete, didn't look like a full impulse. I was remarking how that looked like a 1, 2, and a 3, or an A, B, C. It didn't quite look right. Maybe a double zigzag for this entire thing, but it made sense that we bounced and we had a slightly lower low. The fourth wave went a little bit higher than I would have preferred. Not ideal, but take what we can get. And well, we approached this ideal retracement box. We didn't quite make it there, but this green 2 is long dead now. I'm actually going to take that off the chart altogether because it's no longer relevant, except that, here we go. Took a little bit of finagling. We're very close. Here too, you can see the MACD divergence. Same thing. There's a divergence as we've had lower and lower prices. The lowest stretch was during the third wave of our C wave. And as I mentioned in previous updates, we were talking about how if this really is a second wave, we needed to see a deeper low because second waves are supposed to be deeper and quicker. And we didn't quite get that from our original November high. That's an A, B, and a C. But now we've gotten sufficiently lower, and this looks like a complete impulse wave for our C. When we look at URNM, story is similar, although here we have an even crazier bounce before a lower low. Got a little bit close to our pink box here, and here too we have a divergence in the MACD. And finally, in our URA ETF, Global X, we just about touched that pink ideal retracement box. That is, again, our 38.2% retrace, which is a textbook standard retrace for a second wave. Typically, it's on the shallower end. A second wave can technically go as low as we want. Could actually retrace almost 100% without invalidating our impulsive pattern. We're nowhere near that right now. So that is all good news. What am I expecting next? We need to see some upside impulsive action. The stock market has been in a bit of a funk the past several days or so. We had a promising three-wave rally, but this has been a recurring pattern throughout all of 2022, in which you have very promising rallies that give us a cool three waves up, and looks like we're consolidating our fourth wave, and then we break the whole thing. So it doesn't mean that our rally setups are invalidated, but we may be rising, we may be rallying in a more diagonal kind of setup. That's the stock market. Uranium, of course, is following its own path here, much more like other commodities, although this thing does seem to have run ahead of a lot of the other commodities, such as oil or metals, in which it has already completed a larger five-wave impulse. So again, we are looking for a five-wave impulse up, and we need to see some kind of we need to see a rally to preferably the bottom of this purple box. That is a 38.2 0.32 extension of our larger rally structure. So I'm going to zoom out so you guys get a refresher on what we're talking about here. This whole thing's a first wave. If this is the bottom of the second wave, ideally we get to at least the bottom of this box in five-wave fashion. So we would expect to see some kind of impulsive rally from where we are right now, something like this, maybe like that, all the way into that box. And I'm actually gonna make this make it green. That is a potential. Again, nothing set in stone yet. We have no confirmation that we have bottomed yet, although we have a lot of signs of it. Our bottom of this box would put us about at $13. So if we get a five-wave impulse into that box, that would be a very good sign. In URNM, that number is about $112, $113. If we can get a five-wave impulse into that region, that'll be good. And we need to see this relatively quickly in order to give us more of a bullish setup. And for URA, is see this thing get up to almost $32 in five-wave fashion. I know I have this thing showing here as potentially an ending diagonal or a fifth wave. We had an alternate pattern in which this is actually a fourth wave with the fifth wave to come. We'll touch more on that as we see more of a rally structure develop, but that is a lower possibility in my personal opinion right now. Now, I did show that we need to see some symmetry with what we saw in the previous pullback, in the previous corrective structure. So going back to UUUU, our first wave should clear this B wave top. I would not be surprised to see our third wave of this rally get past that. That would be a good sign that we have something bullish developing. So again, I'll reiterate, we do not have confirmation of a bottom yet. We do not until we get a five-wave rally up off the bottom, and we don't have jack diddly yet. So we got to wait for that. The same applies to a lot of asset classes, cryptos, energy, equities, DOW, S&P, all of them. So have patience, hold on, keep your eyes on the prize, because again, we should be entering a possible multi-year or multi-decade bull market in commodities. And for leveraged opportunities, we want to at least see a larger impulse. There may be an opportunity here whenever we have our smaller first wave of our larger first wave come in. So if we get a 1-2 here, that could be a good place to go in long with leverage, and also a much safer place to accumulate positions of any of these stocks or ETFs if that's your game. But remember, watch for the five of impulse. Don't do anything panic. Don't knee jerk, or don't make any knee jerk actions, and subscribe so you don't miss any upcoming updates on the uranium sector. Until next time, thank you for watching and happy trading.